Welcome, 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 all of you handsome devils and the absolutely beautiful women that make up about 8% of my viewer base and about 2 out of every 1,000 comments. So thanks, Mom, for watching. Look, you guys love cash flow and I love you guys.
Show me the money.
We're a match made in YouTube heaven, and in YouTube heaven, there is a ton of cash flow. So with that being said, in this video, we're going to take a look at small cap dividend stocks, the best of the best. Now, typically when we think of dividend stocks, we think of large, well-established, boring household names. Truth be told though, there are some mid-cap and small cap stocks that are established and pay dividends. So in this video, we're going to check out the DES ticker of Wisdom Tree, which is a small cap dividend ETF, versus another Wisdom Tree, sibling versus sibling, DGRS. Now, of course, we're going to look at yield, total return, expense ratio, holdings, and sectors. So without further ado, let's begin. And just like that, we're in my computer, and as you can see here on the screen, we have the analytics software up and running. And just so you guys know, I haven't typed these in previously. I want you guys to see my reaction and all of us to be able to look at it at the same time. So without further ado, let's go ahead and type in the first one, which is DES. In fact, I actually own this. Now, a lot of you might be wondering, Kenny, why did you pick 2 Wisdom Tree ETFs? Why not pick a Vanguard or a ProShares or some other iShares or something like that, a competitor to Wisdom Tree? And I'll tell you what, in my search, and I may have skipped one, so you never know, let me know in the comment section, but in my search, it was difficult for me to find a small cap dividend ETF that had been around longer than 4 or 5 years. So with that being said, the reason I picked these 2 Wisdom Tree ETFs, they have the longest track record, and I think that's really a lot more valuable when we're looking at previous and historical performance. So let's put $1,000 in DES, and let's compare it to a second portfolio, which I believe, what was it, DGRS? Let's take a look at this, DGRS, I believe so. And yep, Wisdom Tree Quality Dividend Growth, $1,000 here. Let's generate the analysis. Now, what's really interesting is both of these ETFs use the exact same index. And the index is as follows. Let's go over to this. So the Wisdom Tree Small Cap Dividend Fund seeks to track the investment results of dividend-paying small cap companies in the U.S. equity market. That is very opaque, right? That's very broad, thinking, okay. So here, what I like is it has this link, learn more about the index that DES is designed to track. So here's what's interesting. The index is comprised of the companies that compose the bottom 25% of the market capitalization, not bottom 25 of dividend payers, bottom 25 of quality. Keep in mind here, it's the bottom 25% of market cap, meaning the smallest companies within the Wisdom Tree US Dividend Index after the 300 largest companies have been removed. So just to be clear, Wisdom Tree takes the entire Wisdom Tree US Dividend Index, they scrape off the 300 largest dividend paying companies, and what's left is in this ETF, which is typically comprised of small cap and probably even a little bit mid cap as well. So that's what the DES ETF follows. Now let's go over to DGRS, and it's very similar. Again, they take what's left after they scrape off the 300 largest U.S. dividend-paying companies, although once they're at that, then they take the top 50% of what's left over and screen them for quality and dividend growth. So that's what's really interesting. So I think we'll have obviously more growth with DGRS, but maybe a little bit higher yield, and obviously many more companies with DES. So maybe better diversification, but let's check it out. So obviously they have the same expense ratio, 38 basis points. Now that's a lot more than iShares or Vanguard or any of those low-cost leaders, but let's still give it a chance and take a look. Now, as I was talking about previously, I predicted that DES would have a little bit higher yield, and it looks like it beats DGRS by about 25 basis points. So here's a 12-month portfolio yield. Again, this is just a straight-up dividend small cap U.S. fund, whereas this focuses on growth. So you're going to see a little bit more growth here, although lower yield up front. So right here, right off the bat, someone looking for current income may want to do more research research on DES. Someone looking for more growth and DRIP and dividend reinvestment may want to check out DGRS. So as we go down, again, it's mostly comprised of all U.S. stocks. Vanguard gets a little bit wonky in some of the investments, and it sometimes categorizes it outside of maybe what it really might be. Now, this is always interesting. Let's take a look at trailing returns. So over the last 3 months, this is only down about 1%, the dividend growth, whereas straight up dividends are down 2.5%. 1 year, minus 6.48. 1 year, wow, a lot less volatility in this one because, again, I'm assuming it has a lot fewer stocks, probably higher quality investments over the long run. 3 year, yep, and 5 year already DGRS, again, a little bit lower yield, but better total return. Let's take a look at these style boxes. For those of you that have never seen style boxes before, sometimes they look intimidating right at first glance, but they're really simple once someone breaks them down for you. So all it is simply it's a chart in box form that shows, okay, so how many stocks are in here that are of large market size in the value category, 0. And blend and large growth, 0. See, and then it goes mid and then small. So they're really easy to read once you look at it for a minute, but if you were to just glance at it, sometimes people say, oh, that's confusing. But so as we can see, these are small cap ETFs, so they're going to have the lion's share of the holdings within the small box here in the equity style boxes. Over here, we have small, let's see, 42. So fairly balanced across. We have a little bit more mid on this side, which is interesting. But again, fairly same equity styles there. Let's take a look down here at sector diversification. So this is really interesting. And this is typically where these ETFs can sometimes vary quite drastically, which a lot of people might not assume so. So communication services, both of them are pretty light there. Energy, okay, so about 2% energy, almost 0 here in dividend growth. Industrials, really heavy on those. Technology, about the same. Basic materials, a little heavier over here. Consumer cyclical, all right. Financial, ooh, real estate, here's a huge difference. So just the straight up U.S. small cap dividend fund has a lot more real estate than the dividend U.S. Small cap growth fund. Interesting there, about the same. Healthcare, minuscule. Utilities, okay, and a lot more utilities. Again, it's hard for utilities to continually increase their dividends because it has to typically get approved by the municipality or some sort of voting body. So you're going to see a little bit different utility companies in there as well. So let's go up here and let's take a look at some other factors here. I always like to make sure that we're comparing apples to apples, and as you can see, DES has been around a very long time, whereas DGRS has only been around since it looks like 2013. So obviously this is going to be skewed, so what we want to do is view and edit all, and yeah, it looks like we're going to go, the furthest back we can go to be fair in the comparison is to July 25th, 2013. We're going to customize this a little bit as well, so let's see, 7, 25, 2013, okay, and it always goes to the previous month, so that's why I like to do custom, and let's do the 29th here, 2019. We're going to reinvest all dividends and reinvest all capital gains that the ETF might pay out. So as this generates, we'll see here in a moment which is the best. Wow, they track each other very closely, especially through 15. Wow, almost dead on. That's really interesting here. So let's see which one beats which. Average annualized return 7.55, over here 8.53. Okay, so almost a whole % better over here on DGRS. Cumulative return, which is the total return from the beginning date stated above here, is 55%, and this is about 63.5% there. So that's really interesting. I guess that makes sense because we are in a growth period, although maybe DES will outperform DGRS in a recession, in a down market. It'll be interesting to see. Both of them have negative alpha all the way across for the most part. Beta is going to be over 1. I would expect it to be over 1%. They are small caps, so you are going to have some higher volatility there. Again, these best and worst time periods are not going to be apples to oranges because DES was around a lot longer than DGRS. I want to take a look at the holdings. Typically with small cap investments, no one recognizes the company, so that'll be really interesting to see. Wow, here's the big difference. So this one has over 1,100 individual small cap stocks, and again, same index, right, with the ETFs, and so DGRS takes that 1,100 stocks and they take the top 50%, at least a lot less than that, and they screen them for quality and dividend growth and in their earnings as well. So 263 stocks here. You're getting a lot more diversification with DES, although as we see from the sectors, at least you're fairly represented well in almost all of the sectors. As we go down here, again, taking a look at that, yeah, you're going to be light in energy, you're going to be light in communication, but same with DES as well. That's just not a huge thing to look at. Of course, all of it is in the US. I want to make sure. Okay, so here we are. The top 10 holdings. Brookfield, I've heard of that one. And let me know in the comment section down below if you have heard of a lot of these and which ones you have heard of, and maybe you own some of them. I heard of PotlatchDeltic. That's actually a REIT, lumber REIT, like a logging REIT, and those used to be two separate companies. They had a merger. Cohen & Steers, I know that one. Sinclair Broadcast, sounds familiar. Washington Federal, know that one. Patterson, don't know that one. So not a lot over here that I do know. Vector Group, I do know. Tobacco and Real Estate Company. They own some prime real estate in New York City, actually. Some of the best. Terraform Power, I know them. Covanta Holding, I actually own that individually. That is a waste-to-energy garbage incineration company. I don't know this, don't know this. Spectrum Brands, don't know that. South Jersey Industries, don't know that. Don't know any of those. So let me know in the comment section below if you know some of these stocks. What's really interesting is you'll notice higher concentrations over here because this ETF only has about 200 stocks, whereas this one has over 1,000. So you're going to get lower concentrations in all of the individual holdings. And we have actually a lot more real estate over here. Let's go back to the total return chart, and I want to add a benchmark. I just want to see something really quick here. Maybe they have a benchmark. I've actually never done this on one of the videos. No, we need to go. Is it performance and risk? Let's see here. Okay, so here we are. This is the legitimate one, head-to-head, apples to apples. Let me see if I can put a benchmark in here. Let's see. Is it going to let me? Okay, add single benchmark. Let's see, provider, do they have Standard & Poor's, S&P? Come on now, let's see. Okay, Standard & Poor's, and we want to look for a 600 index. That's the small cap. So we want to look for a value, of course, because we're looking for dividends. NR stands for net return. Do they have a value total? Yeah, here we go. Okay, so S&P small cap 600 value total return because we're reinvesting everything. Let's take a look at how that plays out. How do these ETFs oh wow, they closely follow it all the way up until about where are we at? Mid 2017, and then the index actually had a nice breakout here where these were actually laggards. They still went down about the same. That's interesting. So the ETFs are actually lower volatility because as you can see, the index actually dropped down with these others, although it had some higher expansionary periods up here. But overall, they track the total return small cap value index very well. Let's see, does it give a benchmark return? Okay, so the benchmark beat DGRS by basically a percentage point. So it's fairly negligible over the past 5-6 years. Very, very interesting. I might do another one of these videos on mid-cap dividend stocks. Let me know down in the comment section below if you guys would like to see a mid-cap video of this same type. And of course, the newer investors watching this, as you do your research with these exchange-traded funds, I get a lot of questions about, Kenny, which is the best platform to buy these on? Now, that completely depends on, your personal comfort level, what you like as far as service, and honestly, where you're located as you watch this video. For those of you in the US, try to take a look at M1 Finance, Robinhood, those types of free platforms. I typically like M1 better than Robinhood because they offer a lot better features for long-term investors, which are typically the type of people that purchase these ETFs. Now, if you're interested in M1 Finance and you decide that it is the right platform for you, Don't sign up without using a referral link because you're going to leave $10 on the table if you do. So if you look in the description of this video and you click on that link, you're going to get $10 and I'm going to get $10 when you sign up with M1 Finance. Let me know if you guys enjoyed this video. I love all your feedback, and let me know by giving me a thumbs up. That truly lets me know that I should keep doing these videos, and it also lets YouTube know that you guys enjoy my content. So truly, thank you so much for watching, and we'll see all of you next video.